some more analysis. Stan Shamu joining us from IG in Melbourne right now. Yes, Stan, we're seeing risk assets certainly having a strong start in Asia. What do you put that down to?
Yeah, morning, Brady. Absolutely. It does seem like that massively risk-off session from the US on Friday has certainly reversed very quickly. Of course, yesterday we had China's manufacturing PMI number, which came in at 51 versus expectations of about that 50.6 mark. And of course, following the recent readings we've had from China, I think expectations are starting to ride a little bit high that we will continue to see some strongly or improving sentiment from the China front. And of course, today we also have the final HSBC manufacturing PMI reading as well, which of course impressed and came in much better than expected last week. And there are actually some analysts who think that it will come in slightly ahead of the figure we got last week. So we're looking for about that 50.3 mark. And if that comes to fruition, then of course we could see risk continue to be a bit higher early in the trading week. Of course, we also had a slightly downgraded fear that the US attack on Syria is imminent. Of course, like you were saying before, President Obama still needs congressional approval, and that won't be for another week or so. So in the meantime, I think traders are happy to bid risk assets higher. And of course, we have seen sharp reversals in most of the major FX pairs, like the Aussie dollar, which is much better than what it was on Friday, back above that 89 level, trading at around 89.5. We've got the euro dollar, which was down below 132 on Friday, and it's now slightly back above that 132 mark. So it's certainly an encouraging start to the Asian session.
Just in terms of your outlook for the Aussie dollar, though, this week, I mean, it is such a huge week in terms of data and events. What's your expectation of the range that we'll see on the Aussie?
Yeah, absolutely. It does seem like we will come off those lows that we saw last week. Of course, the Aussie has been struggling over the past week with that Syria situation dominating headlines. Now, if the current situation of a slightly downgraded fear on the Syria front continues in the short term, we'll probably continue to see the Aussie recover from those 89 level lows. It's currently at about 89.4, and of course we could see it now test that 90 level should all this China data that we're expecting, and of course some of the comments from the RBA show a slightly less dovish tone. Of course, with China's data, I think that's enough to push us a bit higher today. And then it'll be all up to a lot of local economic data, which is set to be released today and tomorrow as well, as to how the Aussie dollar trades. We've got, of course, company operating profits and building approvals at 11:30. Both readings are expected to show an improvement, and of course any slight disappointment will be something very negative because of course expectations are riding fairly high at the moment. And from the RBA tomorrow, no change is expected, but at the same time I think that the commentary will carry a lot more weight as long as the commentary suggests that they'll be on hold for much longer than the market expects, of which there's a 50-50 sort of split on a November cut amongst analysts at the moment. Very unanimous about tomorrow, about staying on hold, with the swaps market only pricing in about a 6% chance for cut, which is basically nothing. Then we will need to see what's happening with future rates. Of course, if they are staying on hold, that this could push the Aussie dollar a bit higher than the 90 level in the short term. That's in absence of any surprises on the Syria front. And of course, that would probably mean that 92 to 93 level is where the next resistance is for the Aussie dollar in the short term.
And just finally, what's your opening call for the ASX 200 then?
Yeah, we're now calling it a touch higher. Of course, it was pointing lower from Saturday morning's close. I think we were at 5,105. It's since gapped much higher at the reopen of the futures at 8 o'clock. We're now looking at about 5,130 to 35 in that range. And of course, considering as well that a fairly big dividends coming out of the market around 14 points, then this is not a bad result at all. Of course, we've got the likes of BHP, Fortescue, AMP, Amcor and ASX all trading ex-div today. So there's quite some heavyweights paying out or trading ex-div today. So considering that a fairly flat open is not too negative for the local market, chances are we will see a slightly positive tone should we get some positive readings from all the data that we're receiving today. But of course, for some of the gold names, it might be a tough session as the precious metal is back below that 1400 mark, and of course might struggle in the short term due to those downgraded Syria fears. We also have quite a few central banks hitting the wires at the back end of the week, so possibly that will be cause a bit of volatility for global markets. Just on Thursday alone, we've got the ECB, we've got the Bank of England, and of course the BOJ all hitting the wires as well. So it certainly seems like earlier in the week we'll set our own tone, and then later in the week it'll be all about the macro risk for coming in from other central banks around the globe.
Stan, as always, thank you so much.
Cheers, Ray.
Stan Shamu there from IG. Well, let's just look back at the week that was. Stocks on Wall Street ending their worst month since May 2012. Trading volatility suffering from low summer volumes, set taper fears and the crisis in Syria. European indices also hitting lows.